afternoon, everybody. Okay, I'm going to begin 2 years ago when I was pursuing a Bachelor of Commerce in Corporate Finance at this same university. Actually, when I was in my third and final year, our security and investment and trading professor assigned us a task of participating on a scholar investment challenge that was organized by the DarEsSalaam Stock Exchange, which is a secondary market for financial products. The challenge required us as students to use our skill sets and knowledge learned from class and apply them in actually creating a portfolio out of a virtual capital of $3,000, which out of that portfolio was supposed to gain in substantial amount of returns, otherwise known as dividends. Much of me and half of the class didn't actually understand on how to operate on this investment challenge. And then though I had leased out the help of different online resources and offline resources, I wasn't able to catch up at par with the competition's timeline, which was almost 3 months. Now, during that time, what I decided was to cycle around the class to understand who knows about the bits and bytes of the financial market and how they do operate, and for me, on how I can be able to participate further. So a friend of mine actually knew about the things and was able to help me move the virtual capital of $3,000 to an amount of $5,000. And actually the efforts also helped me move within the top 100 of who performed better during the challenge. This is just one side of the story. Now, the other side of the story, I want to start by giving you a fact. The fact that Tanzania has a population of 60 million people. Out of 60 million people, only 500,000 people are the ones who actively participate within the financial market. Furthermore, out of these 500,000 people, only 20 people, according to a report which came out as of this year, have been able to amass a wealth of almost 88.17 million US dollars. Now, this makes only 17% of the entire population who have been able to amass advantages out of the financial market. And furthermore, leaving almost 83% out of that bracket. We may ask ourselves that I've started talking about financial markets. Why am I leaving aside talking about other investment forms like community banks or savings and loan associations? These are actually the ones which are surrounding us within our society, whereby people have been using different formal and informal economies, such as the savings and loan associations and community banks to invest, but they haven't been able to amass a couple of wealth which could make them move. Now, another fact I would like to share with you is that as of 2019, the Bank of Tanzania had calculated that out of these informal economies or formal economies like microfinances, they have been able to give up a share of value of almost 57 billion. Now, 57 billion is a ton of money, especially in the shareholder value, but it hasn't been able to yet signify a gap on income that exists between the people who are already investing within the financial market and the people who are already investing in these informal and formal economies. Now, this is a stringent in terms of us moving forward. And for this stringent, what can we do in order to bridge the income gaps? I have the following proposed solution. Number one, let us invest in technology. Let us invest in technology that scales to these different economies, such as the ones like community banks and village and loan associations. What predominates the market right now is that these economies have also been given an effort of being digitized. We have seen products such as vicoba from brands, from telecommunication brands, even to bank brands, trying to digitize these economies. But what could be done furthermore is that we could tap in the power of the financial markets such that we can be able to make people buy and sell shares. Just as the way people dial for different financial services like airtime or like electricity in the unsupplementary service data, probably known as USSD, that which is star 150, star 00 or whatever. It's the same way that people could be powered up to buy these different financial instruments and for them to be able to amass a wealth outside of their disposable income. The second thing is knowledge. We should invest on knowledge that scales too. Knowledge that scales in terms of teaching people what's in investing, particularly on value investing and growth investing. Now, there is a model that works for these formal economies or informal economies, particularly in peri-urban areas and rural areas, whereby people form investment clubs on how to teach themselves and to invest on different things. But these investment clubs could be leveraged upon by different authorities like the stock exchange or even the capital market authorities, so that people can understand about the bits and bytes of investing. And also these investment clubs could be powered up for them to be able to have their collections dispersed and put on the financial instruments so that it can yield dividends or other sets of returns. Now, before I leave, I'd love to leave you with a fact, actually an understanding for you to get along with. We have a vision as a country that by 2025, we want to alleviate poverty and actually to bridge income gaps or economic gaps between one another, and for us to be able to solidify our status as a middle income economy. My advice is that for everybody in the room to further look onto the power of these financial markets and how they could leverage upon, because as cheaper as $1, we could be able to create a portfolio and build upon a portfolio that could be able to give us the power of amassing wealth. It only starts with me, it starts with you, it starts with us. Thank you very much.